Crude and Brent both moving higher this morning. The moves reflecting the continued geopolitical tensions playing out in the Middle East, and also movement from Hurricane Milton making landfall in Florida. That drove a spike in fuel prices. To discuss what risks might be ahead for the market, we want to bring in Andy Lipow. He's the president of Lipow Oil Associates. Andy, it's great to see you. So we are seeing oil recover from some of that downward pressure that we saw, recover a bit from some of that downward pressure that we saw over the last two trading days. But really the narrative surrounding oil has very much changed over the last 2 weeks amid this fear of escalation of war playing out in the Middle East. Where do you see the prices of oil headed?
Well, that's exactly right. The oil market is pricing in a greater probability of a war between Iran and Israel that would result in a supply disruption. And I should point out that since last year when Hamas invaded Israel, there has been no oil supply disruption, but prices recently have been rising of a fear that one might happen. I think that's why it's difficult to predict where the oil market is going to go. On the one hand, it could spike higher if we were to see something like the Strait of Hormuz being shut. But on the other hand, there's more than adequate oil supply in the market. And you couple that with OPEC deciding to restore some of its production cuts in December means that the oil market is being weighed down. I think that overall, absent the hostilities in the Middle East, you'll see oil trade below $70 once again in the next few weeks.
I mean, you also had this week, Andy, the EIA cutting their own forecast for 2025 and what the oil demand growth profile could look like. What type of overhang do you think that's having on prices as well?
Well, I think between the EIA, the IEA, both revising their forecasts downward, coupled with poor demand growth in China, which is estimated to be only about 200,000 barrels a day this year, I think the overhang next year could still be 500,000 to 1 million barrels a day. And that is really going to force OPEC Plus to continue and defer the restoration of their production cuts into 2025.
And so what does that mean for your longer term target here as well? What pricing should people who are looking at the oil market start to anticipate, or at least start to price in from what you're seeing?
Well, for the balance of the year, it's going to be difficult for WTI prices to get above $80 to $85 a barrel. But as we go through 2025 and world oil demand does start to pick up, I think that we could see WTI prices in around the $85 level.
Andy, the disruption from the hurricanes, you have Hurricane Helene, Hurricane Milton. Of course, we're expecting a very active continuation here of this hurricane season. Do you see that we haven't really talked about that yet? How significant of a factor is it? Not that significant of a factor, just in terms of the potential of what this could do to supply disruption?
Well, as far as both Hurricane Helene and Milton, the impact on the refining industry on the U.S. Gulf Coast was minimal. For Hurricane Helene, we did see some oil production shut-ins in the Gulf of Mexico that were restored very quickly. And for Hurricane Milton, what I would tell you is that the production impacts and the refining impacts were negligible. The biggest impact in the oil industry is really on the supply and distribution of gasoline and other refined products into Tampa. And we'll have to wait and see whether any of those terminals along the waterfront there were damaged. But meanwhile, we already have tankers who have loaded gasoline making their way into the Miami area. So resupply is going to happen. It's whether the infrastructure, the power grid, and employees being available are going to be able to distribute that gasoline to the local retail service station.
What is the typical timeline that takes, Andy? I mean, Chevron they had taken proactive measures within their own Tampa terminal to shut that down.
We should think about it this way. The Coast Guard has to get out into the Tampa Bay area and make sure there's no debris in the channel. Then they have to replace the navigation buoys. If the terminals are okay, then you could start seeing resupply show up as early as Sunday. Maybe possibly Saturday night, but you need these other steps to be put in place before the tankers can actually show up at the terminal. Assuming the terminals do have power, we'll be able to start loading gasoline actually almost immediately because those terminals never empty their supply prior to the hurricane. You don't want those tanks being blown off their foundations, so you need refined products to stay in the tank.
That's great context and background. Andy, appreciate the time. Andy Lipow, who is from Lipow Oil Associates and is the president over there as well. Thanks so much, Andy.